Well, the numbers in August year to date showing that sales growth came in at 14.5%, and that compared with 15% in July. In line with expectations, because as I said earlier, we've had NAAMSA highlighting that we should be expecting a slowdown moving forward.
Indeed. If you look at the growth that we experienced in 2010 compared to 2009, we were coming off a very low base in 2009. And thus the increase at that time was about 25%, so 24.7% for the year to be specific, 2010 compared to 2009. So it was expected that given the higher base in 2010, that 2011 will not see the same growth as experienced in 2010. Many people expected that between 10 and 15% growth this year. So you can see us ticking towards that range. We are now at 14.5, and I think we'll end up within the range of 10 to 15%.
Demand situation aside, we had the Japanese disasters this year bringing some supply constraints to the market as well on vehicle components, and then that had exerted pressure as well. To what extent have manufacturers and retailers been able to play catch up since those events?
It would appear like we are back now into a situation where the stock levels are becoming normal. But obviously there will be some areas and products that perhaps are a little bit behind. But in general, we think that manufacturers have begun to catch up.
So let's drill down into categories here. Passenger vehicle sales and medium, large commercial vehicles remain the main drivers for the kind of sales growth that we have seen come through. And it seems that it's low entry vehicles that's really standing out here. With the consumer still under pressure, though, to what extent is this growth being facilitated by, applications for longer term periods, for example, making things a little bit more affordable in that way?
The consumer's disposable income is coming under pressure, as you rightfully indicate. We think that a number of things make up that specific challenge, and those are fuel costs, transportation costs in general, and you've recently seen increases in electricity, in municipal rates. So we think that as a result of that pressure on disposable income, even though the interest rate has remained fairly flat, for now, we think that those factors have had an impact on the choice of vehicles by consumers.
The choice and also how they finance it. So I mentioned, the longer term periods. There's also those residual values and balloon payments that, offer some relief. To what extent is that being taken up as a facility?
Indeed. I mean, when you look at our applications, particularly within the ABSA group for finance for longer terms, we've seen that there's been a significant growth between now and a year ago for preferences for longer term. And it is in line with consumers basically going for vehicles that they would otherwise not afford for shorter term. And with longer term, they can then afford the installments. So there is a preference, and we're seeing it as becoming a norm now to finance beyond the 60 months that used to be the norm.
Overall, and with those flexibilities now being introduced into finance packages from the applications that you have received, what kind of approval rate are we looking at this stage?
We can't share specific approval rates, but in terms of the trend that we've seen, we're seeing a lot of customers going for longer periods. We see most customers now beginning to ask for the residual values. The quality, though, has not changed that much in terms of the quality of the customer. So to this extent, I think the earlier discussions we had in terms of the pressures on the consumer, it's more around affordability rather than the quality of the consumer that we're seeing applying for vehicle finance. So
that on the consumer side of things, when it comes to passenger vehicles, when we're looking at light commercial vehicles, I mean, they continue to experience lower growth, and then we're seeing strong growth or stronger growth coming through from heavy commercial vehicles and buses. To what extent are you reading this as an indication that the fixed investment side of the economy is now starting to pick up pace?
We believe that's a factor. So the corporate sector and the fixed-term investment side is getting more active. And as we indicated from a consumer point of view, that remains the backbone of the motor vehicle industry in South Africa. The challenge, as you've rightfully observed, is on the light commercials. Although this month we've seen a little bit of an uptick, but generally for the year, that sector remains the one that seems to be not as active as the other two sectors that I've mentioned.